All right, guys. Welcome to a case study. Another case study this week. We've got two in 1 week, and this time it's a short, and it's exactly the short I talked about at the previous pre-market analysis. It's this short, and it's a super clean trade. It's a bit tricky to read, but nice trade nonetheless. And yeah, let's dive into it. So first of all, we get the Asian range on there. We knew that we were above all highs, and therefore, we could look for a potential short into the discounted area. Overall, we know that on the higher time frames, we are not really in an ideal area to look for shorts. Ideally, we would look to short from the premium areas of this bearish range. But we know that we are above all highs. We took some liquidity. We are slowly starting to form bullish structure, and we know that if this is a retracement and price wants to continue to go bearish from these premium areas, price behavior should be correctional instead of impulsive, meaning that instead of expecting something like this, we can expect something like this. And yeah, so with that idea and the idea of okay, we're all above all highs, we're starting to form bullish structure. We can look for discounted pricing. We were also above previous daily highs and above Asia highs. Then what we can do is we can zoom in and let me go into replay mode. Let's take this one. And what we can see here is that on the lower time frames, especially in the 1 minute, it's super clear. We have a low, high, higher low, higher high. Well, not really return to discount, but then again, we have a low, we have a high, a higher low, we have a higher high. And we got price trickling down, breaking below. Sellers getting induced here. And then again, here we have some lows that have been taken out over here. But especially this low that led to that high. And then that bearish break, that was my sign of, okay, we have early sellers being taken out. We have that inducement, so to say. That's still valid. So we have our first lower time frame confluence. In addition to that, we then take Asia highs, we trickle back up. And what we can see here, and this is actually a bit tricky to read, is that we have a low, we have a high, we have a higher low, we have a higher high, and we have a low that led to a high, and then we have a break. And you could either take this lag from this low up to this high and say, okay, we didn't reach back into discounted pricing yet, but I would say take this one, drag it up there. Okay, nice. Then you have this one that led to that one. And from that kind of standpoint, you can also say, okay, you have a low, you have a high, you have a bearish break, bullish break, return to discounted pricing, bullish break. And after that, we never reached back into this discounted area. Then there are two ways to enter this trade. And the first one is, okay, then we have a minor break and we can target these discount areas here. So we have a low that led to a high bearish break. Then you pull this across. And you get your short trade with 1 pip reading room. So you don't even need 1 pip. But let's say you take 1 pip, your entry would be here. 2.2, 2.7, 5.5 pip reading room. And you can target 1 to 4. You can whatever. I personally, I would then target the either Asia lows, or I would target the overall liquidity or discounted pricing from this bullish range. So let's say you target the liquidity, you get a 1 to 21. Of course, taking partials on the way on the way. But yeah, very nice, very clean trade. That's a bit too blue, if you ask me. It doesn't matter. So yeah, and then let's break this trade down one more time quickly. So we know that we took internal range liquidity, we reacted from the POI and we got potential move to the upside, but we also know that if we want price to continue further bearish, this price move to the upside should be correctional. Lining that up with the idea of being above previous daily highs, above old highs, and being above Asia highs, we can expect a potential turnaround into the discounted area from there, where price then can continue to the upside. That was so strange. So we are above all highs, above previous daily highs and above Asia highs. So from this area, we can expect price to redistribute or distribute to the downside, for then price to continue further to the upside. That was a bit better English, right? Then coming down lower, Asia has been taken, and we have our seller's inducement at the over here, and then we can see that price starts to form a nice clean structure. We have a low, a high, a higher low, higher high, minor break, never reach back into discounted pricing. So we can either take a short from the minor break, or we wait for price to make a more major break over there. Use this area as our entry area, which is super valid as well. Let me quickly pull this to the side. And then we give it 1 pip reading room. So we get 45.35. Stop loss off here. 6.5, so 7. And again, you target 1 to 4, or you target this internal range liquidity. Then we let price play out. See on the 5-minute. A lot of continuation trades you can take here in case that fits your plan. So bearish break, entry, bearish break, there, entry. When price continues further down, continues further down, continues further down, starts to range just before Asia. No more volume in the market. Asia opens, get a little bit of volume. Price continues to trickle down and takes internal range liquidity. Targets met. So pretty easy, pretty straightforward. Short trade on EU. One thing that was missing really was that we didn't have a higher time frame POI or demand or supply zone, but in this case we had the other confluences, so it was a nice trade, very clean to take. Hope this made sense. Let me know what you think in the comments. Let me know what you think. Just DM me on Instagram if you have any questions. And yeah, catch you guys later. Peace out.